Hello, friends. I'm Alex and I welcome you to my soul channel, at Alex Suziu. I want to thank you from the bottom of my heart for being part of this adventure. Sparkling Heart. Here, every clip is created with passion, whether we're talking about cryptocurrencies, quality news, tasty recipes, relaxing moments, or wonderful corners of the world. Globe showing Europe Africa sparkles. White heavy check mark if you're new, don't forget to subscribe and activate the bell, my promise. Authentic, diverse, and always captivating content. Thank you for every like, comment and share, you are the engine of this journey. Let's grow together, day after day. Rocket. With love. Alex from at Alex Suziu.
From the early days of Bitcoin in 2009 to the era of NFTs, DeFi, and the metaverse, the cryptocurrency market has been a tale of fascinating ups and downs. But beneath the explosive hype and green and red candlestick charts, there are less visible truths: manipulation, pump and dump strategies, mass psychology, institutional interests, and technologies that are still undervalued or overvalued. In this article, we'll explore each hidden layer that shapes crypto trends and understand why sometimes success isn't about choosing the right coin, but about reading the game in the shadows. Chapter 1: How does a trend form in crypto? 1.1 Defining a trend. A trend in crypto is not just a price movement. It is a subtle combination of social narratives, liquidity flows, political and technological interests, the emotions of the investing masses. 1.2 The role of whales. Whales, large wallets, can move entire markets with a single trade. Famous examples: the BTC dumps of 2018 and the XRP price manipulation in 2020. Whales create FOMO, fear of missing out, to attract retail traders to the upside of the trend, then sell off massively, leaving newcomers to endure the corrections. 1.3 Social media, the new weapon of trends. Twitter, Reddit, Discord, places where rumors become speculative realities. Elon Musk and Dogecoin, a living example of the power of one person to change trends. Chapter 2: The biggest trend manipulations in crypto history. 2.1 Mt. Gox and the Bitcoin crash. In 2014, Mt. Gox, which processed 70% of BTC transactions, was compromised. The result: loss of 850,000 BTC. Massive price drop. Fundamental shift in perception of crypto security. 2.2 ICO mania of 2017. 90% of ICOs in 2017 were scams or complete failures. Billions were raised for projects with no real product. 2.3 Rug pulls in DeFi, 2020 to 2021. Examples: Squid Game token, Squid, 23,000% growth followed by the disappearance of the founders. Crazy yield farming, many projects evaporated in a few months. Chapter 3: The invisible game of institutions. 3.1 How do institutions get into crypto? Investment funds, e.g. Grayscale, Fidelity, buy massively in bear markets. They issue ETFs on Bitcoin and Ethereum, then control the flow of liquidity. 3.2 Why do they release negative news? To artificially lower the price and buy at a discount. Examples: news about China banning BTC mining in 2021. 3.3 Short funds, aggressive short selling of coins during bear periods to profit from the market decline. Chapter 4: Technology vs. Narrative. 4.1 Projects with real technology, but no hype. Chainlink, innovator in data oracles. Algorand, one of the fastest blockchains. 4.2 Projects with hype, but no foundation. SafeMoon, BitConnect, pyramid schemes repackaged as investment opportunities. 4.3 The role of buzzwords. AI plus blockchain, metaverse tokens, decentralized AI, combined to create artificial hype. Chapter 5, Crowd Psychology in Crypto. 5.1 Fear and Greed Index, a widely followed index to gauge market emotions. 5.2 Types of Investors. FOMO investors, buy at the highs. Diamond hands, hold for the long term. Paper hands, sell on the first correction. 5.3 How do manipulators use these emotions? Induce intense fear to force mass selling. Induce intense euphoria to sell at the top. Chapter 6, Hidden Strategies Used by Insiders. 6.1 Pump and dump groups, organized on Telegram or Discord. They choose an obscure token, pump it, then sell when the public starts buying. 6.2 Wash trading, selling and buying between the same accounts to give the impression of high volume. 6.3 Fake news launch, launching fake news to create hype or panic. Chapter 7, The Big Lessons Most Ignored. 7.1 Every exponential trend is followed by a brutal correction. 7.2 If everyone is talking about a currency, it's too late. 7.3 Not your keys, not your coins, the importance of cold storage. Chapter 8, What lies ahead for crypto? 8.1 Tokenization of real assets, NFTs for houses, cars, stocks. 8.2 Artificial intelligence plus blockchain, self-adaptive smart contracts. 8.3 Global regulations, EU and MiCA, US and SEC, impact on the future of stablecoins and exchanges. Chapter 9, How to avoid falling prey to false trends. 9.1 DYOR, do your own research. Project team verification, source code audit, real community activity vs. bots. 9.2 Diversification, don't invest everything in one project. 9.3 Exit plan, set clear profit and loss targets before entering a trade. Chapter 10, Final conclusion, what is the truth about crypto trends? The truth is that trends are not random. They are built, manipulated, and orchestrated by big players, and the average investor must learn to think critically. Success in crypto does not come from following trends at random, but from understanding the mechanisms behind them. Crypto is a game of chess, not luck. And only those who understand the true rules of the game become long-term winners. The final conclusion about the hidden truth behind crypto trends in this video clip. Behind every wave of excitement or panic in the world of crypto, there are not only the classic dynamics of supply and demand, but also invisible, well-orchestrated forces. Crypto trends are often created, fueled, and then manipulated by major players, whether we are talking about whales, financial institutions, organized groups of investors, or social media influencers. The hidden truth is that behind every spectacular move there are deliberate strategies, artificially constructed hype, manipulated trading volumes, carefully crafted narratives, and exploitation of the collective psychology of retail investors. Too often, what appears to be a revolution or a one-of-a-kind opportunity is, in reality, a stage in a game of power and profit that always favors those who understand the unseen rules of the market. Understanding these truths, that trends are not organic, that narratives are often fabricated, and that investor emotions are weapons in the hands of the powerful, is essential for anyone who wants to not just survive, but thrive in the long term in the crypto world. Real success comes not from blindly following trends, but from critical analysis, patience, and the ability to see beyond the obvious. In crypto, the winners aren't those who chase the waves, but those who learn to read them before they form.